Okay, excellent. Thanks for that. So what's the point of today's panel? So Regtech and FinTech have become some of the more hotter markets for investors to be looking at. One of the main reasons for this is that there's a lot of innovation taking place in smaller companies and startups where in applying these things for larger financial firms, while in the financial firms, larger ones, it's a little hard to create things in-house to kind of do that innovation. So what we have here today is our CEO of Cappitech, Ronen Kertis, and Rony Grushka, founder of Markit. So start things off today. This is actually, I've done a lot of, in my previous job as a journalist, I'd done a lot of interviews of both founders and investors. But now this is actually kind of interesting because I also work at Capitech, so now I get to interview my own boss. So, we'll see how he likes all the questions.
And your investor as well.
And your investor, yeah. So you stamp my check. So if you guys have if I'm not getting anything, you want to have some questions from the audience or try to drill them a little, let me know. Okay. So I want to start with you, Rony. You started at Markit, you were a founder there, and now you've, I guess, changed things. Now you're an angel investor. Is that the way to describe you?
Let's call it angel investor, mentor, whatever. Trying to find some interesting stuff within the space I know. But when I left Markit, which was 3 years ago, on an IPO, one of the decisions that I've made was that I will only actively invest in areas where I can add value, know the space, but especially like the people. And that's one of 4 or 5 of those.
Okay. So to that idea of investing in where you know, so a lot of that, I assume a lot of that experience comes from the time you were in Markit. Maybe if you can give us a little bit of story of how was that, I guess Markit would be one of the original FinTech firms. Maybe give a little background on how that, when you came in, when you got there, and where the company started from and where it went to.
Okay, so from my point of view, from my angle, it started with a lucky break, as usual, meaning the founder or the guy who had the original idea, Lance Ugla, went to the LSE with me back in, should I say the year? 86. And we remained friends since. And around 2000, he approached me. I had my own businesses. Most of my portfolio was sold at the time to Generali, and he said, "Why don't you come up and do this thing with me in the UK?" Now, at that time, and we're talking about 2000, 2001, it wasn't called FinTech or Regtech. It was mainly financial services. And the aim of the exercise was very specific. It was to try and provide credit default swaps, data pricing information to banks and financial institutions, and see where it goes from there. It wasn't technology related, it was service related. It was a niche, an area that we, or my partner mainly, saw the need, saw the opportunity, and we went in there. So that's how we started. So that was the idea. And at the end of the day, the reason why it went the way it went is because it was a group of people that we were 5 of us to start with, which were mature, experienced. All of us were at least after 1 or 2, let's call it generations of exits, and very focused. And we built a business model that worked well.
And what was that model if you were starting for services? When did technology become an important component of what you're doing?
So originally the business was really based on third parties, technology, databases, whether it was the different levels of the Oracle's database at the time. So yes, we had technology and programming teams, but technology was an enabler. It wasn't what we sold. We sold content, we sold data, we sold information, and our edge at the time wasn't the technology itself. It was the idea, the content, and the business structure. As we grew, we started to acquire as well as develop our own technologies in different spaces. And when the company diversified to probably 40 or more business sectors or opportunities or offerings, technology started to play with it. But we didn't start as a technology play, but as a service or content play.
So what I've learned is one of the successes of Markit, one of your strategies used, as you alluded to, is being buying other companies. When did you decide that was something that was important for you to start going out on the market?
Probably on day one. Again, because all of us, the founders, were already market participants, let's call it that way, and we knew the upside and the let's call it, and the way, the M&A way, let's call it. We were looking for opportunities from day one. And the first acquisition that we've done was really 12 months after we started the company or the service. And by the time I left, which was 13 years later, we bought about 37 companies, all of them for full integration, meaning there wasn't any M&A play per se, but you're buying company for the content, for the service, for the technology, for the capability, and you're integrating it immediately within your service. So we never sold the company ever, but we started it from day one.
Okay. And going back to now that you've gone into investing into other startups, is that something that you would advise other companies to do as far as to looking to buy out, or is that something specific that was applicable at your time in the early 2000s?
No, I think that it's applicable to every young company, but it's to do with maturity. So buying company and integrating them has a lot to do with discipline and maturity, and having done this before, and not getting sucked into buying something just for the sake of buying it, or because you got the cash to do it, or you can pay by shares or whatever. So the answer is yes. If you are able to act maturely and digest it, I think that there are too many opportunities in the market for any company not to look into it.
Ronen, I want to go to you now. You have a kind of, in a way, a little bit similar, that you were involved with Cappitech as also services before migrating that into a SaaS-based company. When you were first focused on services, when did you make the decision that you had to go necessarily into fintech or to be a Regtech company? What was it about Regtech that kind of like interested you to go there?
Right. So our roots were in fintech. We've been doing fintech since 2000. So we knew that space very well. But as a services companies, in 2013, 2014, we've got quite a lot of mandates to develop regulatory reporting solutions. And then once we saw that this is a pain in the market, we analyzed, and we realized there is a big gap there. There's a big demand. The regulator are pushing companies to be more compliant. The regulations themselves became more and more complex. And on the other hand, there weren't that many proper services other than do-it-yourself or a bespoke solution, which we've been doing as well. And at that point in time, I decided, right, it's now 2014, it's the 21st century, let's build a proper platform for the compliance officers.
And what was that regulation that you were targeting at the time?
Well, we started with EMIR, because 2014, you've been there early days, but 2014 was when EMIR was introduced, and it was probably the first regulation that was full-blown, dual-sided. You need to match the other side, UTI, 60-odd fields, quite complex, and people realize that Excel doesn't scale up anymore, and they have to use a proper bespoke system for that, as opposed to take your trade data, put it into Excel, massage it a bit, and then report. So that's where we started. Obviously, regulation is growing all the time, and we've grown with that. And as you know, we now offer half a dozen products.
And one of the topics that I've heard a few times today over the different seminars is there's this question of build versus purchase. You either want to build things in house or purchase it. When Emir first went live, right into that time, did you feel that the market was people wanted to build it first, or were they looking for something off the shelf immediately?
Well, I think it's a matter of maturity. So the early days, people were used to do those things themselves. I think with Emir, it was probably the first time, the first realization of the market that it does not make sense to continue and build it yourself. A, it's complex, it ever changes. So the total cost of ownership is quite high on one end. On the other hand, and I don't know the crowd here, the audience here, what is it? What are you guys from? Where are you coming from? But if you're a broker, or if you're an asset manager, or if you're an hedge fund, the way you report your regulation doesn't give you any competitive advantage. You want to make it the right way, 100% correct. But other than that, there is no competitive advantage. You want to focus on your business, and therefore reporting lends itself nicely to outsourcing.
Okay. And is there a time that really makes sense for a company to build things on their own instead of buy it from someone else?
Sorry,
does it make sense for companies to either build it, like kind of like you're making the case? It seems to be like there's no point to ever build it, and you should always use another company. No, but when should you be building it and running it yourself?
I think I can say when do we see people doing it, right? It's typically the very large banks. They have lots of IT, complex systems, and they want to do it themselves typically. So that's where, and they're also very wary about their data, right? So they're very concerned about anyone else having a look at my data. So that's where we see people doing it themselves. I have to say that we also see with time change in that area as well, and people realize that cloud solution, for instance, is not a bad word. The FCA are very progressive. They made a point. You probably know it yourself. They actually built their own part of their data center is hosted in AWS. So they went to their firms and told them there isn't a problem with cloud and security. There is a security issue, and you can have security issues in the cloud or on site. So it's how you go about security, not whether you're on this cloud or not. And by the way, your data is already in the cloud because we put our data, which is your data, on the cloud.
And as I expect you, Rony, in terms of Regtech within the fintech world, how do you view it? Do you view it as its own entity and you kind of focus on there, or is it you're looking to kind of look at all fintech?
I think, first of all, Regtech or fintech is a huge space. So trying to define very clearly what is probably a mute exercise. But I love anything to do with regulation or Regtech from, let's call it an investor point of view, because in my view, regulation is the gift that keep on giving. Like it will keep evolving every day, whatever happens. Meaning, politicians can go up and say that they're against over-regulation, and the next morning they'll have another one coming. So if you take this space, who's not an exciting space, it may be even a boring space, but it's growing and it will keep growing. In my view, forever. And the second thing about regulation is that same as we saw in KYC or AML, the institutions, whether they're small or large, start to understand that all of this is really a scale game. There's no point in them doing it themselves, and at the end of the day, they have nothing to hide. Because stupid. We saw this at Markit at KYC, where at the beginning when we offered KYC solution, none of the banks or none of the big trading houses was ready to open up. They said, no, we're not giving that. But at some stage when they understood that about 50 institutions are doing the same KYC check on the same institution or client, they understood that they could do this much better at a fraction of the price. And the same happens in regulation and will keep happening. And that's why I like investing in the space, even that it may be boring.
All right. And then specifically about Cappitech, was there any area, like how did that fit into that, man? Obviously it's regulation, but what specifically about that company do you want to invest in?
My number one, I would say, priority when I'm looking at an investment where I will be active are the people. Meaning I saw too many startups going belly up because of the founders or people that were too young with too large of an ego, et cetera, et cetera. Everyone in the room knows these things. And in Cappitech, I saw a team and a founder that are mature, meaning they're looking at the business, they're not busy at building an empire or an ego, but very focused on a business. I like this. Of course, I know the opportunity, I know the space, so that was for me something that I loved.
Okay, and then Ronen, what was, he was part of a team that was investing. Why did you want to take an investment?
Well, first I might regret on that because my investor calls my business boring and then says that I'm not young. But no, in terms of taking investment, I think two main things for me. One is the capital injection. We realized there is so much more to do and we wanted to do it faster. And obviously having external capital would, is helping us do that faster and better. And the other one is the advice and the strategic view, and having someone like Rony and other people in our board, for us is a great gift and a great, value add, just as the money, if not more than that.
So just if we have anyone from the audience that's looking to in their own fintech companies, so basically what we're saying is that specifically in this area, it's important to have people that are strategic, that can kind of open the doors for those potential clients. That's good.
I think it's door opening is important, but I think it's much more than that. It's just, someone like Rony, who started a company, 5 people, ended up with a company that is $20 billion, listed company, 16,000 employees. They've seen it, they've done it, they saw it so many times. So there are lots of things that we haven't even thought about that they, our investors have seen. So for us, it's much more than just doors opening.
One of the things that Ronen did, and I don't know if that was intentional, but I only saw it at the first board meeting, is that the let's say the 5 or 6 core investors have different attributes. Meaning, I may have certain knowledge and relationship within the space, but other investors are technology experts, and the venture capitalists who are here, who are 83 North, are definitely very strong in fintech, but they would open the doors when time will come for the next stage of the company, etc. So Ronen has built an ecosystem which is very comfortable for everyone, and I think is very efficient, and was very smart of him to do. We pay too much, but that.
Talking about paying too much is one item you have as founders, and you have an idea, and I know many investors will tell you, oh, we want to see something before we invest in you. What do you do in fintech? Like if you're both in Regtech and fintech, if you're trying to sell to a bank, and it might take you 2 years till you actually close a deal on them, and there are instances where you do need to raise $10 million before you can really get off the ground. How do founders that want to get that going and get the money and get investors and people excited about them, how do they go from idea to investment off the bat without having a product ready to go? So, Rony, what's your thoughts on
I think that one of the problem with financial services or financial institutions client is that it's very hard to bullshit them. So by showing them a nice demo, which got nothing behind, et cetera, I don't think you can get anywhere serious with any financial institution. And it's just because of the fact that everything financial institutions do is so sensitive and so dangerous from many aspects, meaning things can go wrong. So they're usually not taking risks. And that is why most of these services are usually done by people who already are what we call at the second or third round of their business lives. They can afford to fund the, let's call it the seed level themselves, and can only go and see the customers when they have a working, let's call it a working prototype, meaning at least working on real data, even if it's a sample data. I see a lot of companies in the fintech space that are looking for funding, and I would say that at least half of them are trying to show you a bullshit story, meaning they're building a demo which is based on nothing behind him. And it's very easy to see.
So more or less you're saying that if someone wants to make a serious product in this industry, you have to have a track record there and some personal cash to be able to build something before you really get to the bigger investors.
Or a rich daddy, yeah.
Rich daddy's always good. Taking back to Regtech, because I know one of the titles of the seminar was also about EMIR and MiFID. Ronen, I want to ask you, what are the trends you're seeing about the future of regulation and what could be taking place in Regtech?
Last year we were awarded top 100 Regtech companies, and I was asking how many Regtech companies are there if you award a top 100, and there were...
At the time, I thought there was only 50s.
And at the time, there were, just shy of 500 Regtech companies in that competition award, right? So, and I know that this year it is even further grown. So there is definitely a need in the market for technical solutions, innovative solutions for the regulation space that has been neglected for many, many years. And, I touched upon it earlier. My view is that there will be more and more. And with time, things will start get consolidated because the industry will not be able to handle hundreds of different companies, and the better ones, the stronger ones, would consolidate. You usually want to deal with one vendor for multiple things. You don't want to have 6 different vendors doing 8 different things for you. So long term, I see the industry starting consolidation.
But is there any specific areas within regulation that you believe it's ripe for disruption and for companies that might be, founders that might be thinking of launching a startup to really focus on that area?
Who's the founder here in the audience for Regtech? Fintech, yeah. So let's talk offline, and I'll give you my ideas.
We have the video, so you can. Ronnie, do you have any input on that, or?
No, as I said, I think that the area is a never-ending pot of opportunities, meaning regulations, and I think that it will keep coming, and there's a lot of opportunities. But as Ronen said, there is a natural business cycle in this space, meaning which is the consolidation. So the large players which have access to the market, whether it's the Markit, ICE, Bloomberg, CME, all these large, will end up absorbing as much as they can in order to have this consolidation make the market more efficient. But that's why we're here. We're here to build those things that at the end of the day they will have to pay very dearly for.
Before we end, is any questions from the audience? Anyone? Okay. I want to conclude with one of the last item you were talking about, the consolidation. What, once everybody wants to do an exit, what's a founder's role once an exit takes place, Ronnie? Are you seeing people being able to then flourish within the company that acquires them, or typically it's you get to another point and that's it, you got to move to your next next venture?
There's no real answer for that because it depends on the circumstances. But I would say that in most of the cases, at least it depends. If there's one founder, it's easy. But the founders would usually remain in the company. Let's say I would say 3 to 5 years on with the acquirer. In an IPO, it's very different because nothing really happens except your capital structure. But in our case, for example, the founders left one by one during the years, and at the moment there's only one founder, which is Lance, who runs the group, who's left there. And as I see at the moment, he will be there forever.
And just Ronen, last question for you. As a founder, like looking back on what you've done, advice to other founders, is there anything specific that you've done differently that you tell people now when they're opening up their own companies, like, okay, I thought this would happen, but really do it this way?
I did not think I would raise money. So, we were self-funding, we were running for a couple of years, and we got to a point, and I touched upon it earlier, why we decided to raise money. So if you're asking for whatever I thought won't happen and did happen is fundraising. 6 months into it, I'm honestly very pleased that what happened. I think it changed our company in many, many ways, all for the good. In my mind, we're working harder, but that's why we're here for. If I were to give a general advice to an entrepreneur, I would talk about the product market fit. I myself also an angel investor in startups, and I see a lot of people coming, and Rony mentioned it earlier, and they have no product market fit. And put aside whether you can raise money on it or not, if you don't put it in front of a client early on in the cycle, and if you don't get someone to actually use it and pay for it, you don't really have a product. You don't really have something that fits anything. You're sitting in a lab and you are building something. So I would strongly recommend entrepreneurs, or the one entrepreneur in the crowd, to try and get
everybody's a one is, so
yeah.
You can be an entrepreneur tomorrow.
Try and get a product market fit as soon as possible.
Thank you very much. I hope those of the attendant that learned a little bit about the idea of what interests investors, what they're looking for in the fintech and regtech world, and as well as some ideas if you are founding your own company or looking to be involved with one, what are some of the ideas of success that help you get along the way?
Thanks, Ron.